and saying with China, leaders have stepped in to support a plunging stock market and a fragile economy. Central Bank announced moves to inject $140 billion of cash into the banking system. The CSI 300 index, which is a benchmark index for shares listed in Shanghai and Shenzhen, lost 13% last year, and it's fallen more since then. But experts say more government support will be needed. Let's bring in market analyst Peter McGuire from Sydney. Peter, these cuts, will they be enough?
Well, I think they will be, and to start a little bit of momentum to the upside. We are looking at a 50 basis point cut, and not only that, it starts on the 5th of February. It's the first one for this year. We had two last year, and I think that this could be the start. I'm not saying that the PBOC are going to sit on their hands, because there's room for more monetary policy easing over the first to second quarter.
Think that more monetary easing will be necessary, or you think they just sort of slowly wait and see?
Well, that's the question. If the stock market bounces to the upside, then that's a strong move. And that really is what they're after, I would think, because it's down the best part of 45% over the last 3 or so years. So there's the question. And then we've got to see whether it continues an uptick, or whether it stays at this or continues to soften.
So help us understand this better then. Why is China lagging in this round of market activity so far in 2024? Has anything significantly changed in their outlook?
Well, foreign investment, that was a major concern going back to 23. It changed the footprint compared to what we saw in 21 and 22. So it's been soft, and that's really a consideration that's had that downdraft. We've lost 1,000 points on the CSI in the last year. So in other words, 25% from this time last year.
And China also faces deflation and weak exports. Is there room for optimism going forward into 2024, perhaps after Chinese New Year?
Well, you would hope so. I mean, GDP came in at 5.2%. We're conscious as far as deflation. We're conscious as far as the economic situation internally. And it's a weak global market. This is the issue as far as consumption. So when all the wheels start turning globally, then that's going to be a big plus for China naturally.
All right, thanks very much, Peter. Peter McGuire speaking to us from Sydney.